Hey, what is going on, my friends, and welcome back to another video on the My Stock Journey channel. So today I did just want to make a quick little update video. A lot's been going on in my portfolio recently. As we know, the week has been absolutely nuts. I did make some very significant changes, and I took some stocks out, or I took one stock out. I added 2 new stocks, and I do have a few plans for next week that I did want to go over today. So today I just wanted to go over a quick little update where we go over my portfolio and what things I'm going to be doing in the upcoming week and what things I've done this week. As per usual, if you guys do like this video, hit that like button. It helps me out so much. I actually did want to mention, we did have a video, my second to last video from this one. I think it did like 700 views or something like that. My average is usually like 1 to 200, so that one did 700. So I do think that the channel's starting to grow, and so we're starting to get out there a little bit more. It's an absolutely amazing feeling. I remember last video I was telling you guys thank you for hitting the 250 subscriber mark. We're pushing 280 subscribers now, and my mind is just, again, absolutely blown. You guys show me so much support. You guys help me out so much. Y'all hit that like button. Y'all drop any comments. Y'all interact with me. You engage. And, it's just really helping the channel grow, and I just appreciate it so much. But with all that being said, if you are new to the channel, hit that subscribe button if you do like these types of videos, and let's get straight into the video. So first up, as we can see, I went ahead and sold my shares of Stag Industrial on M1 Finance. Now, if you guys are new to the channel, you might not know this, but if you have been around for a while, Stag Industrial was actually the very first company that I purchased stocks of. And, if you guys do remember, like 3 or 4 videos ago, I kind of went through this transition phase where I felt like I needed to kind of reevaluate my strategy, and I needed to reevaluate what I was actually investing for in the company I actually had my money in. And, a lot of the companies that I had invested, I just didn't really believe in them in the long term. I didn't feel like they could provide the growth that I was looking for. That doesn't necessarily hold true for Stag. I feel like there's some room to grow potentially, but at the same time, they just don't meet the criteria for the companies that I want to have my money invested into now. I feel like as we go on as investors and as we learn lessons, I feel like it's okay for us to go ahead and change up our portfolio and, take away and sell companies that we don't really love as much as we used to, and kind of put those into companies that we have more faith into nowadays. I feel like that's totally natural. I could be totally wrong, but at the same time, it's just what I feel comfortable with, and I feel like what I feel comfortable with is what I'm going to continue to do, right? So as you can see, I had 64 shares of Stag Industrial. I sold them for $1,996. Now, if you do remember from my original portfolio, I had purchased only 62 shares to start with at an average cost of $21.50. So that means I've made out about $10 roughly per share. I did reinvest dividends in, so I got about 2.5 free shares from the amount of dividends that I started to receive over time. And so, basically I made out with a profit of about $750. And, I just felt it was a good time to go ahead and get out, just because whenever I look at their 5-year plan, I do see that there's potential for growth, but I feel like the growth is very stagnant, and I feel like the growth is kind of inconsistent in a sense that it's just so all over the place sometimes. And those really aren't just the companies I want my money into. I feel like my life is like I'm a fighter, as you can see. I feel like I deal with a lot of stress on a daily basis already, and I don't want to have the stress of watching my money just go all over the place all the time. I know there will be volatility over the next 20 years, but at the same time, if I can limit that as much as I can by investing in the companies in which I believe will be a lot, more constant and consistent, I would rather prefer, to do that. So with that being said, there's nothing really wrong with Stag Industrial. If you're an investor who's okay with a little bit slower growth, but a pretty solid dividend, that is absolutely a stock to look into. But just for me personally, it's not one that I really, in love anymore. And it's not one that I want to have in my portfolio. And I feel like the money, the $1,300 I invested and the $2,000 that I got out of it, I feel like I can do a lot more with that money than keep it into this stock for sure. So we are now here on the Robinhood portfolio. As you can see, we are sitting at about $15,052. So we had a very good week, then we had a pretty bad week in the same week, right? So yesterday we were barely down. We were down about 0.29%, 26% during the day, 0.03 after hours. Honestly, nothing horrible. I think we lost, about $44, $43. Honestly, nothing substantial at all. Very, very weird day. For the week, we were down about $81. As you can see, at our prime, we were up about $350, and then that slowly just went away, over the course of a few days. And it is what it is. You see some weeks where you're a little bit up. You see some weeks where you're a little bit down. It's the stock market. It's what happens, especially during times like these crazy times, right? For the month, we are down $293. We have recovered a good bit. At one point, we were down about $745. So it is nice to see that number in the $200, $100 range, because definitely sitting at $700, $800 losses is not fun at all. 'Cause I think at one point, yeah, we were down about 4.86%. For the last 3 months, we're actually up $721, and all time we're up about $900 in this account. And if you do remember, I was up about $700 in my other account, so that put me up somewhere around $1,500 overall. So we're going down here. We can see pretty much I have all of the same stocks that I had as last time. I have store capital, 221 shares at an average cost of $18.47. We're looking at a total return of $935. Coca-Cola, we have 58 shares, average cost of $45.11. So we are sitting at a little bit of a profit of about $200. Apple, once again, I think we are down on this one. Yeah, $384 average cost for 5 shares. And so we're sitting at about a $74 loss, which I'm honestly not too mad about because I'm going to go ahead and start picking up some more shares here in the near future. As you can see, this is starting way under my average cost. So that does give me a pretty solid buying opportunity. And so with that being said, that's what I'm going to go ahead and do. Probably next week, I'm going to try to fill this up to about 7 shares, maybe pick up 3 more, 2 more, something around those lines. Microsoft is next up. We have 9.59 shares with an average cost of $198. So we are sitting a little bit in the positive still because my average cost is $198. It's sitting at about a $200 strike price. So that, is getting close. I honestly believe that unless something happens, it's probably going to hit my strike price as it continues to come down a bit. But honestly, I'm not too mad about it. I feel like my average cost is a solid average cost. And so whenever it hits that average cost, I'm going to go ahead and pick up some more shares, maybe fill it up to about 10 or 11 for sure. Next up, we have Aflac. Aflac, we're sitting, honestly, not too bad. We're sitting at an average cost of $34.51 for 37 shares. The strike price for Aflac right now, or the stock price, is $36.77. So that puts us at a total return of about $85. So Aflac's sitting well above the water. I think they had a pretty good week, yeah. Went up about 1.8, coming up on 2% this week. So honestly, cannot complain. Aflac's been a very good performer, especially in the last month. It hit a very low bottom, and then it started to recover very strongly. Atmos Energy next up. I think I do have 2 more shares since the last one. I'm not 100% sure, but we're sitting at 8 shares of Atmos Energy, right under 8 shares at least, at an average cost of $101.65. That gives us a total return of $10.81, and I cannot complain. Had a pretty good week this week. It started the week pretty low in the 99 area, worked its way up about 2.25%, and I do believe it's going to continue to climb, especially during times right now. Atmos Energy is one of the stocks that I looked at during this pandemic and thought it's going to come out the pandemic a lot stronger than it went in. And so with that being said, I do believe that they're going to continue to do very well in the next upcoming months. Tesla, we all know what's going on with Tesla, man. Tesla's just all over the place. It did report quarterly earnings that made it profitable. It did have 4 quarterly earnings reports that were profitable, so that does allow it to be a part of the S&P 500. So there's a lot of hype going into it. I do feel like people pretty much knew they were going to be profitable, and so that earnings report was already priced into Tesla, so that's why whenever it came out, it started to go down a bit. I do believe it's just going to be up and down and all around as it does. And so with that being said, I'm honestly not too worried about it. I'm probably going to pick up a few more shares of a few more percentages of a share of Tesla coming up here. Probably grow up to maybe about $750, $800. Like I said, I'm taking Tesla real slow. It's so crazy and all over the place. That's why I just don't like putting all my money into it at once, just because the next day it could be down 8%, or the next day it could be up 8% and be a lot higher than I want it to be to purchase. So, I'm just taking my time with it. It's a stock that I believe in for the years to come, for sure. And so with that being said, I have no reason to really rush it. Next up on the list, we have Visa. So Visa is going to be one that I do believe is also going to come out of this pandemic very strong. I feel like people are going to start using credit cards a lot more, and people are going to start using credit transactions a lot more than in the past, especially if people are all germophobic and they're worried about giving cash and taking cash and doing all that. I feel like Visa can definitely benefit from that. And I feel like a lot of companies and a lot of businesses are going to want to prefer credit purchases, just as there's a lot less, human transaction. I feel like this pandemic did a lot of bad, but at the same time, it's going to change the world in ways that kind of create this new technologic, electronic wave. And so with that being said, I do believe Visa is going to benefit from that. That's why I am trying to build up my position in them a bit. I'm at about $500 market value because I have 2.5 shares at an average cost of $194.70. So that puts me at a total return of a whopping 91 cents. And so, but hopefully, over the next couple weeks, over the next couple months, we do see a little bit more growth here. Over the last month, they're up about, last 3 months, they're up about 15.66%. So as you can tell, they are growing, and they're going to continue to grow, in my opinion, for the next years, decades to come. So if you have been around for the channel, you do see the difference. There is one new holding to our portfolio here, and that is going to be ARK-F, or ARK FinTech Innovation. This is basically an ETF that's more, circled around technology and very new and upcoming technological companies such as Apple, Square, etc. So I do have 3.5 shares at an average cost of $35.01. Leaves me at a total return of about negative $3.50. I did buy at kind of not the best time. It was somewhere up here. But I mean, at the end of the day, what can you do? I'm going to go ahead and average cost my way down and continue to ride this little down wave until it starts to recover and continue its upward momentum, which I do believe is going to continue on for the next couple months, at least for the next couple years for sure. So why ARK-F? So if we come over here into their website, we can see their top 10 holdings, and this is what absolutely just grabbed my attention. I know these ARK ETFs have done very well in the past. There's like 3 or 4 other ones that are just, kind of started where the ARK-F has and just continued to grow on to the 70s, 80s, and I don't see any reason as to why this one can't. And so with that being said, I'm definitely going to make this a very, very big part of my portfolio, especially for the next year or two coming up here. And so we'll see what happens with that, right? So as we can see, if we look at the top 10 holdings for ARK-F, we're sitting at 11.6% for Square, 5.19% for Mercado Libre, 4.95% for Zillow, 4.8% for LendingTree, 4.69% for Tencent, 4.3% for Apple, 3.6% for Adyen, 3.2% for Alibaba, 3.19% for Sia, and 3.16% for Amazon. So why did I buy this stock? Well, the biggest one, and one of the biggest reasons and why I did buy it, was that top holding of Square. So Square is a company that I absolutely love. Like, I'm seeing these Square electronics all over the place. My barber has it. The food court people have it. Every single place I've been going recently is starting to get it, and I believe that company is doing absolutely amazing. I feel like they still need to prove themselves a bit, and so that's why I don't necessarily want to invest all my money into them at once, but I did want to put some money into them in some way. And so this was kind of the way I wanted to do it, because a lot of these stocks on here are ones that I didn't necessarily want to just go ahead and invest directly in, but I wanted to invest into a general ETF that kind of had a piece of them, and ARK-F was absolutely perfect. Once I kind of came across it and watched the video, I believe, and I saw it and I went and looked at their holdings and their management, and I was like, this is a stock that I have to get into now. I feel like it's an absolute steal. This company is like Zillow. Zillow has been doing absolutely amazing things to that, especially to their website, especially if you've used Zillow before. You know that their website is going through a lot of changes, a lot of maintenance things, and they're making it a lot better. They're growing, they're reinvesting. And I think using websites like Zillow, again, is going to be a part of the future a lot more, because people are going to not really maybe want so much interaction with humans. Maybe they just want to do little tours and stuff online. And I feel like Zillow can definitely be a leader in that, that sector for sure. Of course, we have 4% in Apple, another major one. I don't even really have to explain that one. We have 4.7% in Tencent. Tencent is doing phenomenally. They have a whole bunch to do with games. They own PUBG, and I think they're going to just continue to just destroy their sector, destroy all of their competition. They're in a big lead right now. They're coming up and they're doing amazing. And so I believe they'll continue to do good as well. And it just goes on and on. Alibaba, obviously everyone knows Alibaba is amazing. Amazon's amazing. So with that being said, I feel like this is a very good way for me to invest my money into a little bit more places without having to really do all the research and have to go ahead and, do all the analysis and do all this type of stuff. I feel like this ETF is going to be perfect for me personally. It's an active ETF, so if one of these starts cutting up, boom, they're going to cut it. And so, I feel like this one's perfect, and I really, really, really have a lot of faith in it. So with that being said, I'm going to put loads and loads of money into it. I'm going to make it a very major part of my portfolio for the next years to come, and we're going to see what happens with it. I could be wrong, it could tank, but at the same time, I feel like I'm very confident, and when I feel so confident and I feel so comfortable with the stock, I go ahead and I go for it. I shoot for the stars and I just see what happens, right? So lastly, I did want to go over what's going to happen with the money that I sold Stag Industrial on. So this is my plan. Kind of give me your feedback. Tell me what you like. Tell me what you don't like. So what I plan on doing with my money from Stag Industrial, as you do recall, I had about $2,000 roughly, maybe like $4 over, under, whatever. So that $2,000 is all going to come into this portfolio. My current game plan right now is that I'm going to put 500 into ARK-F. If we go to your equity, I'm going to make that another player in my portfolio. As you can see, some of my smaller players are about 600 and 500. So I want to add 500 into that one, just to get it around that 600 mark, just to make sure I'm keeping my portfolio as even as possible. I don't like having really big pieces and really small pieces. I like to keep them somewhat the same, but honestly, it's going to take me a while to get these equal to my $5,000 holding in store capital. But so my next game plan is I want to use the $1,500 to go ahead and go to Carnival and do some selling covered puts. So basically what that means is that I'm going to be collecting premium and selling puts at a strike price that I believe Carnival could honestly could maybe hit, but I don't think it probably won't hit, but it could hit. And honestly, if it does hit, I'll be very excited, because this is my idea, right? When it comes to Carnival and when it comes to, you know, airlines, I feel like we're starting to somewhat see some type of hope with this whole pandemic thing. I do believe that at some point this year, we're going to see some type of working vaccine. I believe we're going to see something that helps. And so with that being said, I feel like Carnival and I feel like these like airlines are all going to benefit from it, because we have a Carnival, we have Norwegian Cruise Line, and then, so, you know, that's our cruises. And then we have our Deltas and our Spirits and our American Airlines, and that's our airlines. I feel like both of those are really in the slumps right now because of this. And I feel like as soon as some type of vaccine comes out or some working treatment comes out, these are definitely going to spike up. I want to go with cruises just because I feel like there's a little bit more growth potential there. This is definitely one that I'm looking at for a year to 2 year spectrum. I don't want to hold this forever, but I do feel like for the next 2 years, it could be a very solid hold. I have a lot of faith in their management, honestly. It's just like whenever it comes to holding it for a long time, I don't see more growth past what it's done already. I feel like last year it was at its peak, and I don't really feel like they're going to outgrow what they've already been doing. But with that being said, you know, you look at me, I love cruises. I absolutely love going on cruises. I've been on multiple cruises in my life, and I can't wait for there to be a vaccine and do all these things so I can go back on a cruise one day. And I know there's millions and millions of people just like me. And so with that being said, I feel like right now it's an absolute steal to get in the Carnival industry or get in the cruise industry and go ahead and put some money into it. And over the next couple years, as this whole pandemic sorts itself out, we will absolutely see some growth there. So that's why I'm not really all that mad. I'm going to keep selling covered puts and collecting premium to lower my cost basis for whenever the time comes that I do get, you know, assigned to purchase these 100 shares of Carnival. But that's what I'll use my other about $1,500 for in this portfolio. So that will be the end of the video. I wanted to make it pretty quick. I know I kind of ramble a little bit sometimes, especially when I get really excited about what I'm doing, but I also want to make sure I go in depth and give you guys a full understanding of my logic as to why I purchase certain things or I don't purchase certain things and I sell other things, just because I know there's some of you who do buy the same things that I do, and I don't recommend you do that, honestly, just because I have different time frames than you, and if I see a certain situation come up, I might sell it and not make a video about it for a week. And so with that being said, I don't really recommend anyone just go copy exactly what I'm doing. If you want to, that's on you. This is not financial advice, of course, but you know, everyone's up to do their own thing. But I do want to make sure that I provide in-depth reasons as to why I do certain things. If you guys did like this type of video, definitely hit the like button for me. Once again, it helps me out so much. We're pushing 300 subscribers, and I would love hitting that 300 subscriber mark by August 1st. We've hit 100 subscribers every single month. We kind of slowed down a little bit at the beginning of this month, but we've picked up like 70 subscribers within the last like 16 days. So I feel like if we can keep this momentum going, we can hit that 300 subscriber mark by August 1st. We will see. I thank you guys so much. I thank you all for all the support, and I'll see you next time. Peace.